will be very, very big as well. Big breakout very, very soon. But I've been saying that for a couple of days now, haven't I? Hello Adrian, and welcome back to another episode of the Dang Oracle. It's 7:30 p.m. UTC plus 8 is where my time zone is. And welcome everybody who is joining me around the world. Hope you are doing well as well. Hope you had a little bit more sleep than me because yeah, I was thinking yesterday, during the night we would have some big movements or something like that. Sadly enough, it has been another another more sideways movement last night, but I did enter a little position on Bitcoin, a little one, not that big. I mainly took out a lot of options trades because I do believe that this week will have a very big movement for this week. And for today, because I'm a little bit sleepy, I have Coca-Cola, but the vanilla flavor Coca-Cola. Hi Darren, hi Alvin, hi Gita. And I don't think the rest is going to join us tonight because they are all asleep. I'm just kidding. So while we wait for some people to be waking up, let's take a look at the COVID situation and some numbers of see if we are doing something better there. So, United States are very close now to 2 million cases. Brazil, our biggest issue right now, is over 700,000. Russia, a little bit close to 500,000 right now. Let's take a look on how it looks on the charts. Poof. Hi, Nikolai. Glad you can make it. Hi, Adam. So, we have crossed the 7 million confirmed cases, and we had a little bit of a slope down from yesterday, so that's pretty good. The US is still up but slowing down, I guess. Brazil is still up but slowing down, I guess. Russia is a big problem. Hi Mongol. UK, yeah, is doing better. India is going up really, really fast, and Spain is slowing down as well. So the good thing about the other country, European countries, is that it is slowing down, right? It is slowing down. But in the other countries, it's still pretty bad. It's still pretty bad. Hi, charts and darts. Welcome from Australia. Well, that's wait. If you are from Australia, it has to be really, really late for you over there. Isn't it like morning over there for you? Hi, John. Hi, Lex. So, first of all, wanted to show you this, what I've observed for CME options. And this is the chart. Hi, Zaldi. This is the chart, and as you can see, for the past, since begin of May, basically, everything has been calls on the CME options on the futures and open interest. So all the professional traders basically have been putting long. So it's all calls, as you can see here, and a very small amount of puts, as you can see. Ooh, Matthew, your state is going to be reopening. That's pretty cool to hear. Yeah, I would also wait it out a little bit. I know a lot of people are very looking forward to be doing something again and traveling a little bit and going back. But yeah, I would wait it out also a little bit, or definitely be prepared. I don't know about you guys, but at home I'm super prepared. I have like a scanner, a portable UV scanner. I have a machine, a UV machine where I can put my mask in that filters and cleans the mask, so I can reuse my mask. I have basically alcohol everywhere, highest grade alcohol that cleans the virus, in case that I'm washing my hands. I get my doorknobs and and places where there's a lot of touching, sprayed almost every hour. So maybe you can call me a little bit scary, but I'm a scared little chicken. Okay, I really don't want anything to happen, not only to myself, but mainly to my baby boy, of course, the real dang oracle, who is growing substantially. He has been growing very, very quickly. I just had to throw away some first newborn clothes already, so that means he's growing pretty bigly. Hi Phil from Austria. How's the weather over there in Austria? Is it cold? Over here it's super hot, by the way, in the Philippines. I'm currently in the Philippines. It's getting really hot, and that also shows on my electricity bill. So I think there's something wrong with my electricity bill though, but yeah. Hi Hearns, hi Michael. Yes, so yeah. So yeah, as you can see, professional traders are actually betting on, basically what this chart says is they are betting that the price is going to be going up rather than down on CMEs. That can be interpreted as a good thing and a negative thing, as you know, when too many people are longing or too many people are putting out calls. That can be a big problem. And squeezes can be input and this and that. So have to be a little bit careful there. Anyways, we can also wait 1 second. That's not the right chart. That's not the right chart either. Where is the chart that I wanted to show? Nope, that's not it either. Let me go through this. God damn it. Here. Our COT chart. That's what basically what I've yeah, I think there's something wrong with Morocco, because suddenly my electricity bill for this month has multiplied by 6. So it's a 600% increase on my Morocco bill, and I don't think I'm not mining or anything like that. So I'm not growing wheat or anything like that as well. So I don't know why suddenly my bill has increased by 600%. I have to call them, or I have to go to their office or something like that and have it checked out properly. But yeah, anyways. What I wanted to show, as you can see, retailers has been increasing once again. Retail has been going up, but the professional traders has been going up as well, as you can see here. The only thing that went down are the institutional traders, as you can see over here. So professional traders still are thinking bullish, very bullish on my. I'm actually very bearish on my Morocco bill. God damn it! When I got that bill, I was like, what the fuck. Professional traders still think mainly that the price is going up, retail as well, while institutions took a leg down. So that's quite interesting to see on the COT chart, and as well on the picture that I just showed you guys, that yeah, so many calls are being input by professional traders. So yeah, that's quite a substantial amount of people that are bullish. So I'm a little bit on the concerned hand right now, because it's a little bit too much right now. It's a little bit too much, and I'm a bit scared that that we might not get that a bullish, super bullish move that we have been expecting for quite some time now. Anyways, so yesterday we got the full Grundlach report. It was a call yesterday by Double Line Funds. For people who don't know Double Line Funds, it's one of the biggest investment funds in the US. It is managing $129 billion or something like that, quite a substantial amount. $129 billion dollars fund. So it's quite interesting. And the CEO actually said that there is a 76.8% chance that the stocks are going to be revisiting the March lows. Well, I guess he's a fan of Fibonacci numbers, because 76.8 seems like a Fibonacci retracement like there. But yeah, it's just funny that he said that. So 76.8% chance that we are going back down below the March lows. So he is actually quite bearish on the current upside movement right now, which is something that we have to, you know, keep in our mind, because it's not a small fund that is saying that, right? So we can go over a little bit over his the full size show, how his performances are, what blah blah blah, this that. Okay. Most of the stuff that the report is saying, we kind of know already as well, how there's like a high amount of debt, blah blah blah, how the federal balance sheet is going up, and that the FAD is buying basically all the stocks like crazy, how the Japanese debt to the GDP is over 250% right now. So Japan, definitely with the negative rates, are going to have a big problem. And the balance sheets, as you can see here, of Bank of Japan is not, of course, very, very crazy. FED is actually still low in comparison with, for example, the European Central Bank and so on like that. But in the last 6 months, obviously, the FED did crazy things. And as you can see on the chart, yeah, they basically bought everything that they wanted to do. All right. So what is good is basically Superman. What he's saying is, what is good is things are recovering, as you can see here. Seated diners are coming back up, as you can see. Florida, blah blah blah, but still New York, obviously, still not open and stuff like that. So hotel occupancy is recovering as well, but it's, of course, still nowhere near the 2009 area, because, of course, things are just reopening right now. So occupancy is starting to slowly come back, as you can see. Government financing with protection of payback. So small business obviously are being helped out, or else, you know, they're gonna be. But there's a lot of companies that are going to be closing down, of course. This is the FED funds, volatility. It's not anything. It's not that important. ETF flow, corporate debts. Of course, we can see that amount of corporate debts. So the US companies have borrowed almost a year's worth of cash in 5 months. So they have actually borrowed, as you can see here, for the whole year in 5 months. So they want to get through with the loan for the rest of the year. As you can see here, the amount of debt cumulative for corporate bonds, as you can see here, crazy amount of high. It's not that important. Liquidity, yeah, of course, the bonds are going up. Rest of the world, that's not that important. The CARES Act, of course, everybody is now on the CARES Act because of the unemployment. Congratulations, Alvin, you deserve it. S&P. Oh yeah, here is the, of course, what we've, maybe I can put that on the full screen. That's maybe better, right? Smart, very smart. Where were we? Here. So yeah, here we can clearly see that the reason why, God damn it, the reason why the S&P is skyrocketing is basically because of the big six: Facebook, Apple, Alphabet, Amazon, Netflix, and Microsoft. Those are actually, as you can see, the ones that are basically leading everything. All the other ones are actually slowly going up, but it's lagging behind. So it's not that. I mean, basically, this is the top six, and the reason why we have that V-shaped correction, basically. Other than that, the rest are going up, obviously, but it's not that big, right? Here we can see the difference. If we didn't have Facebook, Apple, Alphabet, Amazon, Netflix, and Microsoft, things would not be looking good at all for the S&P. Same for Nasdaq, of course. This is versus gold. This is the small business optimism. As you can see, very low right now. The small businesses are not very optimistic. kind of kind of normal as well. Average wages versus corporate profits. As you can see, corporate profits are going down. Of course, nobody is able to make money, but also that that has an effect on the average wages of people. Salaries are basically low as well, very, very low as well. But yeah. Retail invest. Okay, this is probably the most important one, and why I am a little bit worried for in the future, basically. And that's the reason is that retail investors have been growing. As you can see here, if we are looking at the mega cap growth stocks, this whole move towards the upside, the V-shaped correction, has actually been retail investors driven. So that worries me quite substantially. So it's not the institutions, it's not the professional traders, it's mainly retail investments. So it's retailers that have been buying into this buy the dip, everything is very cheap, buy the dip mentality. And the problem is, like I've explained before, usually when retail is driving something, they're also the first ones that will jump ship, and they will be also the first one that is going to be dumping everything, and then things will go down very, very fast as well. So for me, that is the biggest troublesome information that I'm getting from this report. As you can see here, online brokers enjoy lockdown boom. Apparently, there's nothing else to do. Then because of the lockdown, everybody is trading. So you can clearly see here the amount of new client accounts that have been created in the past couple of months has been insane. So there were apparently more people like me who were bored and nothing to do, opened up trading accounts or started to be interested in trading and this and that. So yeah, it's actually quite a good time for me to be starting my channel, I guess, because a lot of people apparently are interested in trading right now. And it has been growing, as you can see, substantially. But of course, once again, that causes for me a lot of concern because when retailers are the ones who are driving a price, then yeah, it's not sustainable. Usually they just get dumped on their faces later on. It's not that important. New York, that's the inflation, expected inflation. It's not that important. Money supply, well, money supply, that's pretty sick also. Of course, we've printed so much money, so the money supply is a lot, of course. But as we can see, the Dixie or the dollar index has not really gone down that much. So even though we have a huge supply of minted oversupply, let's call it oversupply of printed dollars, the value of the dollar has not really gone down. So that's a little bit contradictory because if you had some crash course in economics, when that's what they usually say, when something has a lot of supply, the value goes down. But apparently that's not the case for the US dollar. We can print 10 trillion of dollars, the value still stays the same. That's basically what this chart is telling us. But like I said, the influence of all this is we're gonna, well, not we, the world is going to be paying the price. Like I said, most likely not this year. Everything will still be okay, I guess, this year, but next year I think that's going to be a different case. Gold spot price, yeah, we've spoken about gold for quite a while already. Overall, I am bullish long term. Short term, most likely a small pullback, but a local top at like 1,750. I think that was like some sort of a local top. We might get like our retracement back to like the $1,600 dollar levels, or and then go back up further from there. Basically, that's what I'm expecting, because when S&P and the stocks, or the traditional market, Nasdaq and all the traditional markets are going up, then gold is going down, of course, because all the money is flowing into stocks. And when the stocks are crashing, then it goes back into gold. That's why they call it a hedge, right? The dollar milkshake theory. Okay, I'll take a look at it. Adam, thanks for that. I've never heard about it before, so I'll take a look at it. Gold and selected currencies. Not that important. Okay, this is kryptonite. Basically, what is negative or what is bad. As you can see, the federal budget deficit of the GDP is insanely high, right? I've told you guys already, because they're buying everything so high, it's actually higher than the global domestic product of the whole or of the whole country. So very high unemployment rate, a deficit that is higher than the GDP. That's really bad, obviously. Here we can see the U3 and the U6. U3 and U6 is like an adjusted unemployment rate. It means that they also count the people that are unemployed, but they still are doing a lot of effort to be working. So it's like an average number. But as you can see, it's really bad. Unemployment to population. It's not that important. Unemployment insurance approval. Yeah, a lot of people are, of course, requesting from the CARES Act, trying to get loans or trying to get some help from the government. And as you can see, the approval rate right now has reached 76%, and normally it never passes 30%. So everybody who wants to get help from the government is getting it. So you can't really, say that bad things about it. A lot of the unemployment insurance are getting approved and getting paid, but like I said, the money has to come from somewhere, and we'll see. Global bank stocks. So we can clearly see that the value of bank stocks are tremendously, performance is tremendously going down. So banks are having a very big issue, and they're going to still have a big issue if, of course, they don't find a way to make money somehow, right? So that's one of the reasons why JP Morgan is accepting or starting to accept cryptocurrency companies and monies, although he really hated it before, because banks are starting to feel the pressure, right? Banks are starting to feel the pressure from cryptocurrencies and online banking, let's put it like that. US corporate debt. Oh yeah, basically it's saying that the rating of the debt that the US is taking on is obviously now a C grade, because more bad debt, because they are basically buying every type of debt that they can put their hands on, right? So of course they will have a lot of bad debts, or a lot of C or B grade debts, rather than keeping everything on their A grade. It's not that important. Cost of yield, CDX investment grade. That's just the default rate. So people are defaulting on their loans. That's normal. Treasury bonds. We can see that the payout if you're buying some treasuries is very, very low. Of course, nobody. I mean, if you put your money on the bank or you're buying any treasuries, obviously you're not getting any real returns from it as well, right? 10 years or 0.85%. It's very low. Copper versus, I don't know why they're doing a copper gold ratio versus USD 10 years. Kind of silly, but I guess they wanted to show some correlation between it. 30-year yields. 30-year yields are at 1.61%. Yay guys, 30-year yields. Wow. Now you understand why people are trading cryptocurrencies. Treasury yields more total, and this is like the return of their bonds and some statistics of their bonds, and this is their portfolio composition. As you can see, this is what their portfolio looks like if you're part of the double line fund. So thought that was quite interesting for people to know. I think for me the two key points, or something that I didn't know that much in detail just yet, is one, retail driven this big pump, and two, a lot of people apparently because they are bored and they don't know what to do during these days, they have been interested in trading and interested in the stock market and so on. So for me, that's a good thing. That's a happy thing. But in the long term, that sounds a little bit fishy. That sounds a little bit worrisome. Yeah. So let's take a quick look at the S&P and the Nasdaq. Nasdaq looks like this on the 4-hour. Looks pretty good. If you're looking at the daily, what can I say? There's nothing stopping Nasdaq, baby. We are crossing the 10,000 and we are going to the moon. There's nothing stopping that. There's nothing stopping Nasdaq right now, as you can see. S&P looks a little bit doesn't look as good as Nasdaq, as we can see right here. We sort of are like yesterday I told you guys we wanted to see if this is becoming a bearish engulfing candle. It did not happen, so that maintains my bullishness more towards the upside than the downside. We are currently forming some sort of like a doji candle, but like I said and I explained before, Nasdaq is actually the leading indicator right now. Everything seems to be following Nasdaq. So if Nasdaq is showing me that we are pumping, I think S&P is going to be pumping as well. So my bullish feeling about Bitcoin is still exactly the same, but there is a like sort of like a ticking time bomb right now. That's a ticking time bomb because the following. Let's take a look on the weekly chart. The reason why I feel that it has to kind of happen within the next 24 hours, actually. It kind of has to happen within the next 24 hours is the reason it's following. And that is if we are looking, because tomorrow, very, very, very important is we will have the daily close that is going to be coinciding with the 2-day close, and that is going to be coinciding with the 3-day close. So tomorrow at 8 a.m. we will have a 3-day, 2-day, and the daily close, and that's obviously going to be very, very important and very impactful. And okay, let's take a look at the 3-day chart. And as you can see, and I've spoken about that before already, if we are not going to be making a push up towards, let's say, 9.8k, if we don't close above 9.8k or something like that, our stocks will be remaining towards the downside, and that would be, like I said, that would be not good. And that would also mean, of course, this cross towards the downside on the RSI, right? So if we close tomorrow below 9.7k, that would be most likely be the end of the short-term bullishness feeling for me. Then for the 2-day, exactly the same. Wait, before I go there, the 3-day is still I'm not saying it looks bearish or anything like that. We are still above the 10-day simple moving average. So that's basically the key area right there, which is at 9.6k. But I would already be pretty bearish below 9.7k, to be honest, because like I said, we want the stocks to be curling upwards rather than downwards, right? Okay, so on the 2-day chart, same story. We still are bouncing off the 10 simple moving average, or this red line here, which is currently at 9,464. So in terms of like moving averages, nothing is no issues, but the problem is the momentum. And as you can see here, the stocks are curling down right now, as we can see. So if tomorrow we get a price below at 8 a.m. on the daily, 2-day, and the 3-day close below 9.7k, I do believe that the momentum will be gone, and we will have that pullback that we have been talking about for pretty much the whole week, right? Pretty much the whole week. So in terms of the ranges or the movement, it's exactly the same. I still, because of the HVP that is still flashing, by the way, HVP is still flashing, and everything, I still expect us either to move a very big move towards like 11.5k, just break out of that whole thing, or go back down towards, let's say, 7.5k or something like that. Well, not immediately, but eventually getting there towards the 7.5k. We've been talking about those two numbers for, like I said, for a really long time as well already, but we might see the first structural break by tomorrow, basically. So those are the two things that I'm looking out for, either towards the upside or the downside, of course. But tomorrow, if we are going to start seeing more momentum or more stokes towards the downside with that 3-day, 2-day, and daily close, that will give us a lot of information, basically. So that's just basically tomorrow morning, 8 a.m. for me, will be the most important time to be seeing what is going on there. But overall, can't say that we are still bearish. We are going down a little bit here, but yesterday we still closed above we are still closing everything above all the major moving averages. But like I said, we are waiting for some structure to be breaking or going up or going down, right? So right now on the 4-hour chart, as we can see, we are still holding this trend line, if we don't look at this, if we look at this as a fake out, then we can see that this is some sort of an ascending triangle, right? So if we are just looking at the lines here, it looks like an ascending triangle with this as a fake out, and then usually an ascending triangle breaks towards the upside rather than the downside, right? So if we make a measured move from this ascending triangle, then we can see that it is approximately this zone here, which I've talked about before already, around the 10.2k. We have a VWAP resistance here at 10,250. So somewhere most likely between 10,150 and 10,250. So let's call it 10.2k to make it easy. So do we still get that swipe towards the 10.2k, or is this going to be over? That's basically what we are looking and waiting for. For now, as you can see, still no issues at all. We are still above the EMA 21 on the 4-hour even. So my bullishness still remains towards the top side. But what I'm really worried about is the momentum. Like I said, if we don't break it by tomorrow, I kind of start feeling that the momentum will be lost for the bulls. So it's like a ticking time bomb right now. But if we are looking at the ascending triangle that we are forming right now here, we can clearly see that we are very nearing pretty much the apex right now. So as you can see here, 11th of June, 12th of June. So yeah, basically tomorrow, later tonight, by Friday, we should get a resolution, at least from this small pattern here. So I would say if we break up towards the 10.2k, or of course we break down towards our expected 9.850, 9.9k area, which is something we have 8.9 or 8.8k or 8.9k area, of course not 9.9, 8.8k or 8.9k area, which is something that we've spoken about for a long time also already. So what are we looking for? Exactly the same thing as we've been looking for the past 7 days. Do we break the 9.9k area? Then I expect a swipe up towards most likely around this area here to this green box here, 10.4k ish area. If we swipe above 9.9k, now we can move our block of downwards a little bit higher. So I would say around 9.5k. If we are breaking below 9.5k, then most likely I would be aiming towards that 8.8, 8.9k ish area. If we are breaking below the 9.5k, which is currently around the EMA 100, or this blue line right here. So if we close a 4-hour candle below that EMA 100, most likely I'll be aiming towards the 8.9, 8.8k area. Or if we just basically spike below this 9,463, if we make a lower low there, just price trading below it, I think that will do it. But for now, I still cannot be bearish until it happens. But it's on the ticking clock right now. That's the biggest issue right now. So very important two things that we have to be looking forward later tonight is, do we finally break that zone, because we are very, very near there, or do we close below 9.7 and the momentum will be gone for the bulls with the 3-day, 2-day, and the daily candle close by tomorrow. So time is really of the essence right now for the bulls. Okay, so what happened for myself personally yesterday? So I told you guys I most likely will be trying to enter a long once again, and I'm in a very small long position right now, from a little bit below 9.7k. I think it's like 9,690 or something like that. So a little bit, let's call it 9.7k, right? So not that far away from where we're at right now. I'm still bullish right now. I still think that we will be swiping at least this 10.2k area or something like that, even though the time is of the essence right now, right? So let's take a look at the expected move charts. I don't think there will be that many changes. I would say, yeah, top of the line around 10k and bottom of the line around 9.5k. That's basically the ranges that we've been looking at for forever already. So let's see what it gives. Expected move charts, what are you saying? So expected move charts are saying first standard deviation on the top side is 9,982, which is around the 10k area, and the bottom side of the first standard deviation is 9,534. Well, what do you know? Nothing changed. Nothing changed. Of course, the Stokes on the 12-hour chart is curling up, as you can see here. Hi, Tina. As curling up. So, like I said, I moved that bar now. Didn't want to do that. Can we go back? Yeah, the problem is, like I said, we can on the next 12-hour candle close, we can do this, right? We get rejected on that, but I still, like I said, I still think that we will go at least up towards here, which would be our 10k plus area, before we get a small pullback. If we do that, most likely what will happen is something like this, where we pull back and then go back even higher towards the 11.5k. So that's still what I think will happen, with Nasdaq rallying, with S&P going up and everything going up. So I can't be bearish until I see some retracement on the traditional stock market. Okay, that's the 12-hour Stokes. Let's take a look at the RSI. RSI is currently above the EMA 21, but yeah, it's basically a smack on top of it, so could go either way, right? But yeah, HVP is of course still flashing, as you can see. HVP is still flashing on the 12-hour. I think it's let's see if it's flashing on the daily as well. I don't think it flashes on the daily. No. So Stokes, as you can see here, are like wavering. Like I said, tomorrow, if the daily close, the 2-day close, and the 3-day close goes below 9.7, it will most likely head downwards. So the momentum for the bulls potentially could be gone. Like I said, currently RSI is below the EMA, but it's very near. It's at 9,772. So yeah. Let's take a look at the 4-hour. Oh, whoa, 4-hour HVP is flashing. So yes, has to happen today, right guys? Has to happen today now. It has to happen today now. It's probably gonna happen before. Like I said, tomorrow is such an important day with the 3-day, 2-day, and the daily close. It kind of has to happen today. It wants to curl up to the upside, as you can see. It wants to curl up to the upside, and what do you know? Kind of sort of like an invert head and shoulders type of structure here. Interesting. Here, RSI is above the EMA, but it's very near as well, 9,749, so could go either way, pretty much, right? So HVP is flashing on the 4-hour, HVP is flashing on the 12-hour, you know, and tomorrow we have the 3-day, 2-day, and the daily close. So I just feel like it kind of has to happen. It's kind of now or never, right? Same on the CME chart. As we can see, HVP is flashing right now, and it's actually way more bullish for the CME chart. The 12-hour Stokes are literally at the bottom and curling up towards the upside right now. So that is super, 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 super bullish for me. Let's take a look on the daily. Daily is also flashing on the HVP, as you can see. Oops. Yeah, Stokes are still up towards the upside, so very good. Daily looks very, very bullish. Yep. So yeah, I remain bullish. I am in a little long position from like 9,690 or something like that. I was hoping that it would go a little bit lower, but I didn't have the chance to enter anything lower. I mean, after it pushed up, kind of have to make a decision, and as long as this trend line is holding, as long as the stock market and everything else is holding, it's just more fun. It has been more fun to be trading a stock market than anything else, which is a very, very, very strange, thing to say. But yeah, hope I don't get stopped out once again on my long. That will be very, very annoying once again. Well, I put my stop loss this time at 9,700, so I'll make a massive $10 spread if price goes back down below 9.7k, and then we'll be analyzing everything. But yeah, basically pretty much the same thing that I've been saying the past 7 days, the same ranges. I can't be bearish as long as we are closing above EMA 21 on the daily. It's just how it is. Plus stock market is going up. The only thing that is a little bit concerning for me is the VIX. Let me show you the VIX. The VIX is starting to break out of this falling wedge. So that means that most likely, and we got the HVP flashing also. That means most likely the S&P might get a little pullback there, but it hasn't happened just yet. And Stokes on the daily for the S&P is starting to curl down also as well. So that could be the problem. That could be a big problem, actually. That could be a big problem. So Bitcoin really doesn't have much time. So it has to kind of happen today. But yeah, I still have faith in our little Bitcoin. I still have faith, at least towards a 10.2k ish area. Maybe swipe that 10.2k before we break back down. That would be nice. Yeah, so maybe swipe back up in this red box here, make it double top, sort of like a double top pattern, and then break down. That would be something like this, right? So we break up towards here, then we form like a double top here, and then break down towards our bullish, our defense zone here, which is around 8.8, 8.9k, or this line here, right? So here, something like that, and then bounce back up once again from there, and hopefully a big bounce. So yeah, let's wait and see. But tomorrow is basically going to be once again a very defining moment. But this time it's really a defining moment, because like I said, bulls are technically on a ticking time bomb right now. They kind of have to push it. By tomorrow. So that's the clock. The clock is ticking. Go Bulls, go Bulls. Also, yeah, yesterday this is what I was drawing on the RSI. As we can see, we have some sort of like a falling wedge, so I kind of expected price to be going up, but the price did this, so it's not that strong. But now it seems to be making a V and a higher low, so that's not that bad. Something, yeah, RSI is doing this, so can't be bearish on that. Can't be bearish on that. Yeah. So yeah, still expecting still expecting my push at least towards the 10.2k, but this can with the VIX showing, with momentum that is starting to fade, it's starting to become really problematic for the bulls. I'll be switching into short mode pretty soon if we don't see any action basically tomorrow, right? So tomorrow morning, wake up early once again. I hope you, but I always wake up early. I don't know about you guys, but I always wake up early, definitely because of the baby. The baby doesn't sleep that much, so I can't sleep that much either. But yeah, we are nearing a breakout moment. So 4-hour HVP is flashing. 12-hour HVP is flashing. CME HVP is flashing. So tomorrow we have the 3-day, 2-day, and the daily close. Yeah, this is it, guys. Really, this is it. This is it. So I think, oh God, it was such a long night last night. I was really thinking that we would have a major push. I think I went to bed at around 3 a.m. or something like that. Then today I took a nap at like 1 p.m. From 1 p.m. to 2 p.m. something like that. But I think it's gonna be a long night once again. Kind of has to, because like I said, has to happen tonight or tomorrow. There will be a close at 8 a.m. I'm pretty much prepared and covered already with my options, with my weekly options. I did a lot of weekly options because, like I said, for me this week is going to be, it's going to happen this week, not next week. So it will most likely be happening this week. It's just too much HVP is flashing too much. So yeah, that's what I'm looking at, and that will be it for today. Let's hope we can make some money and we get some movement out of Bitcoin, and call it a day. So everything is still the same for like the past 7 days. I don't want to repeat myself. I would like to, don't want to repeat myself once again, but I do believe that it will happen most likely later tonight. The big move, either towards breaking up towards the so this green box, after this green box 10.4k area, something like that, or down towards 8.9k or 8.8k, something like that. One of those two moves most likely later tonight or by tomorrow. All right, see you guys tomorrow. Once again, please hope like, share, comment, blah blah blah, everything on my channel. Same time and same place tomorrow. Once again, 7:30 p.m. UTC +8. Let's hope we can make some monies. Yes. Yes. Good luck, guys. Good luck, and let's follow up tomorrow. I think tomorrow is going to be a way more interesting stream than the past 7 days. Although, you know, this is trading. You know, this, you have to have that patience, or else you'll make a lot of mistakes and you'll have a lot of problems. So let's see what happens tomorrow. See you guys. Join me again. And yeah, of course, until then,